Alrighty, so why is crypto crashing? What could be causing this drop? Well, investors have reduced their investments across the board as the Fed continues attempting to manage inflation by hiking interest rates. People are staying away from riskier investments as long as the economy is still quite unstable. Declining macroeconomic conditions, plus the ongoing conflict between Russia and Ukraine, are also playing a big part. The long awaited merge of Ethereum, which converted it from a proof of work blockchain to a proof of stake blockchain, was also finished recently. What does this mean though? Well, essentially, proof of work is accomplished through mining, but proof of stake is accomplished through owners staking their coins to confirm transactions on the blockchain. The merge's biggest advantage is that it saves a lot more energy now, which is making it way better for the environment. However, there is a catch to this, though. Gary Gensler is the head of the Securities and Exchange Commission, also known as the SEC, indicated that the introduction of the merge would categorize currencies that allow users to validate coins through staking, would classify them as a security, thus making them subject to SEC regulation. Due to the fact that cryptocurrencies are based outside of government rules, many investors are a bit worried of these statements, and typically worry leads to more sell-offs. Gensler added that he wasn't focusing on any particular cryptocurrency and reiterated his conviction that the great majority of cryptocurrencies meet the definition of securities. However, Ethereum is not the only cryptocurrency that must navigate through this regulatory minefield. President Biden issued an executive order directing the White House Office of Science and Technology to look into the effects of digital assets back in March. Bitcoin, which is estimated to use 0.55% of the world's annual electrical production, is of particular interest. For comparison, that is roughly as much energy as the entire nation of Sweden uses in a year. Early in September, the Office of Science and Technology presented their assessment, which stated, "Get clean or get out." They noted more specifically that electricity usage from digital assets is contributing to greenhouse gas emissions, additional pollution, noise, and other local impacts. The United States government has a responsibility to ensure electrical grid stability, enable a clean energy future, and protect communities from pollution and climate change impacts. The office suggests developing clean energy performance requirements for crypto mining in order to reduce ongoing pollution in order to achieve these goals. They noted that should these steps prove insufficient at minimizing impacts, they warned that the Biden administration should explore administrative actions, and Congress should consider legislation to prohibit or ban the use of high energy consumption resolution techniques for crypto asset mining. In other words, Bitcoin and Ethereum are directly in the middle of a community that dislikes regulation and government interference, and that is exactly what the government is trying to do right now. And as a result, the prices are falling. But that is not all. The White House has released a number of studies urging regulators, most notably the SEC and Commodity Futures Trading Commission, to tighten up regulation of cryptocurrencies. Even Treasury Secretary Janet Yellen has given her 2 cents regarding the topic by noting that the reports clearly identify the real challenges and risks from digital assets used for financial services. If these risks are mitigated, digital assets and other emerging technologies could offer significant opportunities. Mrs. Yellen also added that innovation is one of the hallmarks of a vibrant financial system and economy, but as we've painfully learned from history, innovation without adequate regulation can result in significant disruptions and harm to the financial system and individuals. So ultimately, with this Ethereum merge and all this chatter around cryptocurrencies, the government has put a lot more eyes on the topic, and now they are trying to regulate it. And ultimately, the people who were initially the most attracted to crypto were against government regulations, are suffering now because regulations equal it not being decentralized anymore, which is causing more panic and more selling across the market.